A very good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Chair Jerome Powell calls for courage and humility in the Fed's forecast methods. Treasury yields fall to the lowest in more than a month as traders await the auction, and more comments from Powell. Disney rises after an earnings beat. Theme parks deliver the biggest boost to profits. Streaming losses narrow and subscribers grow. Ken Griffin warns the world is facing structural changes.
We're likely to see higher real rates, and we're likely to see higher nominal rates, and that will have a real implication on the cost of funding our enormous deficit.
Some pretty big warning shots from Ken Griffin there. We're going to have more from the New Economy Forum throughout the hour. Ermotti has just finished on stage with Francine Lacroix. Of course, he's talking about it's a good indication the world is taking UBS AT1s. More from Danny and I on that in a moment. Here we are. It is 8 days of a rally, 8th consecutive run-up in equities. That's what we've got on the board this morning. Now, if we manage to put another one in, the VIX, by the way, at the bottom of your screen, will be the longest slide since October 2015. If you manage to have a positive day on this, Jim Reed at Deutsche Bank says it's going to be day 9, the longest rally. Danny Berger found a fact of the day, and she very kindly gave it away. The longest run-up since 2004, if you can have green on the screen by the end of the day. When it comes to the bond auction, nobody choked. I think that's the important point. Nobody got indigestion on the 10-year government bond auction last night. And indeed, the view from UBS is, if you want to be in tech, they, ironically, want to be in China tech because it's a 30% discount to the Magnificent Seven. The Magnificent Seven, they are more cautious on that there. Eurostoxx 50 up 0.5%. Now, it is led by a stock that perhaps you have not heard of. But payment system in this country, payment system around the world are being revolutionized. There is a stock, it's Aiden, and that is up over 30% this morning. As well as that, you've got the deflationary issues going on in China. Will the PBOC go for an easing? There is Aiden, up 31%. It's still under its IPO price. Danny, good morning.
Good morning, Manus. The bond market rally has been pretty incredible. We're undoing some of that this morning. We're back above 4.5% in the 10-year yield. But as you mentioned, Manus, we had a bond auction. It wasn't the best bond auction, but it happened, and it went off without a hitch. We saw 30-year paper go down to its lowest level in over a month. We're going to have $24 billion on deck today of 30-year notes. How will that go? Will we be able to absorb it yet again? NY crude, that is higher this morning, but still hovering around its lowest level in 3 months. It slid 7% in the past 2 days. And finally, you know, when I woke up this morning, Manus Cranny sent me an email and said, Danny, you got to put Bitcoin in your market check this morning. He is the crypto fanatic among us. So just for Manus, I've got Bitcoin. Look, it's a good one to have today, up 3 1/3%, above $36,000. This optimism that finally we're going to get a physically backed Bitcoin ETF into the market. All right, the other thing Manus and I were emailing about this morning is it is official. It is officially pricing steady as she goes in this market. For a radio listening audience, I have a chart that's developed market cash rates 6 months forward and 1 month forward. 6 months forward, it is now reading this blue line here, no change. That's right. We're expecting no more hikes. And in fact, Manus, we're pricing in 50 basis points of aggregate cuts for developed markets. That's the first time we have that kind of level since the COVID pandemic kicked off.
Yeah, I mean, even though you've had the RBA go for one more hike this week, Danny, I think the issue is what does 2024 hold? 100 basis points. We're at 90 basis points on the futures at the moment for cuts here in the United States. But probably the ECB will go first. There's a 68% probability the ECB will go for their cuts first. And hallelujah, 30-year rate mortgages here in the States. They dropped yesterday like a stone, so it could be in there. You never know. I could be a property owner in the U.S. yet. Not at 7.5%, I assure you. It's a whole new world. It's a whole new world. We know I love that song. It's Disney. They reported their fourth quarter profit. It beat the expectations as the company launched a beta trial of the bundle, Disney Plus and Hulu, next month.
We expect that Hulu on Disney Plus will result in increased engagement, greater advertising opportunities, lower churn, and reduced customer acquisition costs, thereby increasing our overall margins.
Joining us now is Alex Webb. So Bob Iger's revamp of Disney, it's gathering pace. I think, to coin a phrase from him, an era of fixing, an era of building. Iger is on a mission. Good morning, Alex.
Yeah, it certainly seems as though things are really starting to kick in. Don't forget, of course, Iger came back after his initial successor as Disney CEO was let go, essentially. And the thing that's fascinating is that when Iger, in his first time at Disney, the thing that he left was really investing in growth, scrapping the dividend, turning themselves into a Netflix analog by chasing those streaming subscribers. What's happening now is he's really doing the inverse. He's cutting back on costs. He announced another $2 billion in cost savings, in addition to the $5 billion that have already been announced. They've cut 8,000 jobs already. They say, though, there aren't going to be any further, at least major, job cuts. And this is really building towards the prospects of issuing a dividend again, which is something that in the current climate with high interest rates that investors, I clearly hopes, will appreciate.
So in other earnings, we had ARM yesterday. It's first since it IPO'd. Not so well received, perhaps.
Yeah, the challenge is with ARM that they had really been trying to sell this story that they were an AI stock. We've seen AI stocks, of course, not least NVIDIA, massively bid up since ChatGPT was released almost exactly a year ago. They aren't really in that AI space yet. Their main end market is really sort of smartphones. The brains of most smartphones, from iPhones to Samsungs and beyond, are built on ARM designs. The Apple chips, they are built on ARM, blueprints, essentially. Now, he's trying to pivot. The CEO, Rene Haas, is trying to pivot into new spaces. The thing he's saying is that there are agreements coming down the line. They just don't know when they're going to hit yet. So there was a sort of narrowing of the range, the midpoint of that range, in terms of their revenue in the 3 months through December. The midpoint of that range is below analysts' expectations. So that's not brilliant news for ARM investors. In the near term, there is still some optimism looking further forward.
Yeah, it's a bit of a damp squid. After that IPO, you would have thought it was sort of like an evangelist moment on reasons to be involved in this stuff.
You got to explain that phrase to the Americans. The Americans aren't going to know what a damp squib is.
Well, think of Halloween. They know Halloween, don't they? And you got the little spit. When we were kids, when we were young, way before Danny Berger, you had these little things that whizzed around, and it went. And instead of going whiz, 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 whiz up, it went. There you go. You get sound effects as well. So that is a damp squib. Well done, Danny Berger. It's cultural transition.
Yeah.
Ireland.
Education
Dubai.
On the show.
She's keeping it real. What about SoftBank? I mean, they are up to their knees in WeWork, and they're up to their knees in ARM. It was a loss.
SoftBank still owns 90% of ARM, and of course, when they sold out that 10% a little bit, a few months ago, that was something that they gave them a little bit more capital to invest in new prospects. The challenge is that they haven't, in recent years, had a brilliant brilliant track record in investing in those sort of prospects. WeWork is really the biggest of the dampest of those squibs, to attenuate the metaphor a little bit. But it's now announced another $1.7 billion in losses on WeWork, in the order of $14 billion they've lost in total. Masayoshi Son, the founder, head of SoftBank, he features in the Apple TV Plus series about WeWork's troubles. WeWork, of course, declared bankruptcy. SoftBank feels the pain more than almost anyone else as the biggest investor. So the challenge now is what is happening with the non-public companies in the Vision Fund, that's their VC arm's portfolio. Nobody knows. That's creating perhaps SoftBank themselves know. They don't know publicly. There are no valuations on those companies. That is creating a huge amount of nervousness among SoftBank's investors.
I am all in for working in damp squib wherever we can. I want this phrase to be waiting for me when I get back to America. It's my favorite British one.
Word of the year 2024, Merriam-Webster.
Yes, I love it. I love it. Nominate it now, folks. Alex, thank you very much. That's Bloomberg's Alex Webb. Manis, let's get to some of the other top stories that are trending on the terminal this morning. Lilly's diabetes drug was approved for weight loss by the FDA. The drug, branded Zepbound, will be available by the end of the year and is cheaper than a similar product from rival Novo Nordisk. AstraZeneca is also entering the growing obesity market, clinching a deal to develop a drug with a Chinese biotech firm.
The Fed is scrutinizing Morgan Stanley's wealth management business over its measures to prevent potential money laundering by wealthy clients from outside the U.S. Bloomberg has learned that the regulator is pressing the bank to improve controls and processes.
Israel says its military has pushed deeper into Hamas territory in northern Gaza. The U.S., meanwhile, says it has carried out what Defense Secretary Lloyd Austin calls self-defense strikes on a weapons depot in Syria. U.S. forces have been attacked several times in Syria and Iraq since the last month. Manis.
Coming up, we're going to dig into the central bank talk and China with Klaus Baader, Global Chief Economist at Societe Generale. Danny.
And coming up, more from Bloomberg New Economy Forum. We're going to be hearing from Hillary Clinton, Ken Griffin, and UBS CEO Sergio Ermotti. Ermotti highlighting the tension between the U.S. and China.
The war cannot afford an escalation, and most likely both countries cannot really afford some things to escalate in terms of economic consequences. I mean, the situation in both countries is fragile, and I guess a geopolitical escalation is not going to be in the interest of both countries.
The minute we start to print dollars to deal with the possibility of default, our economy is in a deep tailspin. So it's a theoretical possibility that we can go there, but the economic consequences would be devastating.
Citadel CEO Ken Griffin speaking at the Bloomberg New Economy Forum. Joining Manis and me now is a man who knows the finer points of a damn squib. It is Klaus Baader, Global Chief Economist at Soc Gen, who, I guess that's maybe not part of your everyday lingo either. So you join me and the rest of the Americans. Speaking of a damn squib, we had the auction yesterday, and it kind of seemed to go off without a hitch. There weren't the fireworks that maybe you'd expect. We got a 30-year auction today. Is this just going to continue to vex the market, or does it seem like with yesterday's auction, with a lower amount on bid now from the Treasury, that perhaps we can absorb this?
Yeah, I think so. The quarterly refunding announcement last week, of course, was hotly expected and had caused, I think, quite a lot of tensions in the market. And the combination of the Fed and Jay Powell sounding, relatively relaxed, and an announcement that was actually not that different from what people expected. But I think after the previous refunding announcement, there was a lot of concern that there'd be a whole lot of coupon issuance. And so the market has relaxed. But, I don't think it's a foregone conclusion that there's going to be all that supply of government debt is going to be smoothly absorbed. We'll see.
Well, we'll see whether we get a light indigestion or not. Klaus, good morning to you. Ken Griffin has taken the New Economy Forum by storm. He's talking about spending. The U.S. is spending like a drunken sailor. The deficit is $33 trillion. And if we keep printing money, we're going to have a few problems. You suggest we will not deal with our issues in 2024 because we're in an election year, and that, the Fed, we're just going to keep printing treasuries to pay the interest bill. Is this extending to pretend? Are we building up to a much bigger debt and bond issue and crisis in the United States of America that simply nobody wants to talk about?
That's, of course, an incredibly difficult question. We just don't know what are the limits to indebtedness. Japan is a perfect example. Japan has absolutely enormously high public sector deficits and debt. And so far, it hasn't really caused a big fallout. It's important that you are issuing in your own currency, and that's why in Europe, for instance, the situation is very different. The route through central bank funding is simply not there. Of course, it does mean the more debt you have, the higher the interest rate has to be. I think that's an inescapable conclusion.
Klaus, along with the U.S. government spending like a drunken sailor, to put it in Ken Griffin's words, perhaps the U.S. consumer is also spending maybe like a drunken sailor, maybe a little bit less. But you point out what a contrast Europe is to this. The fact that Europeans are not spending the excess saving from the pandemic. How does that end, then, in the difference between the end game for the U.S. and the European economy?
Well, I mean, in the U.S., consumers are clearly spending those excess savings. And they're actually, interestingly, over the last few months, they're spending them at a slightly accelerated rate. Which I think argues against the idea that it's really only the rich and the super rich who have these excess savings. They do seem to be a bit more broadly distributed, although quite clearly at the very bottom end of the income distribution. There's probably not much left. Yeah, it's not only the U.S. where these excess savings are being spent. It's a little bit more difficult to judge in Japan, but in Japan, the household savings rate is now also quite clearly below the 2019 level. In Australia, the same thing is also happening. So what's going on in Europe? I'm not sure, but I think it's definitely got something to do with confidence. And I think it might have, the really bare case is that European households have this sense of sharply accelerated inflation, and therefore the feeling that their pension pot and their wealth is worth less in real terms than they previously thought. And so they're going to hold on to those. Now, I'm still hopeful that we're going to get a little bit more spending, but the most recent signs are not positive. In fact, for instance, in Germany and other economies where we already have the third quarter data, the household savings rate actually went up. So excess savings continue to be piled up.
I'm still hoping that it's going to be cheap to live on a Greek beach in retirement. I'm just going to put that thought out there. Not Mykonos. It's a little bit expensive. We have deflation in China. Danny's not going to visit me in Mykonos when I retire. We've got producer prices
down. If you got a free place for me to stay, I will.
I'll always make a place for you to stay somewhere, Danny, on the sofa. Producer prices down for the 13th month. Consumer prices, we are in deflation. I mean, when do we, is this the nadir? That's what I want to try and understand of deflation in China.
Well, I think that it's stretching it to call it deflation. Core inflation is still positive, although it did slip a little bit. It's primarily very weak food prices on a year-on-year basis, and that has everything to do with pork prices, which I'm sure you know are hugely important in China. That price pressures in China are weak and that they're going to remain weak, I think is pretty clear. The demand growth in China is weak, and we still got all the problems in the housing market. I think from an international perspective, the question really is China going to export deflation?
Yeah.
And, on one level you would say, well, great, let's have some of that, because after all, we have a lot of inflation still in Western economies, and central banks want to get it down. I looked at what I think is the key here is, of course, not what Chinese consumer prices are doing. What is key here is what are producer prices doing, and in particular, consumer goods and consumer durables. And when I looked at the evidence a few months ago, I'd say that the risk of China exporting deflation is actually lower than it has been, because the rate of deflation there is less than it has been for a long time. And yet those prices have been going down for years and years.
Klaus, thank you so much. That's Klaus going head-to-head with the headline writers at Bloomberg. It's a stretch for SocGen to call it deflation, not at the house of Bloomberg. Klaus, thank you very much. Klaus Baader there at Societe Generale. Danny, what have we got on commodities? We didn't quite get there. Oil was your favourite this week. I mean, we're in slippage mode, but we're bouncing back ever so slightly this morning.
Yeah, I mean, it is a slight bounce back considering we've fallen about 7% over the past 2 days. It's those demand concerns, Manus, that really has been gripping this market, not necessarily the continued supply cuts from Saudi and from Russia. Iron ore, also an issue of demand, Manus.
Yeah, I mean, I caught up with Bob McNally. I want to show you the spreads, which is the front of the bag. And this is the real backwardation that you want to keep an eye out on. It is fading because it's a washout. Bob McNally at Rapidin says, keep an eye on these. This is telling you that there's a real concern about oversupply from non-OPEC. It's a washout as the war premium fades. Plenty of oil for the market in the very near term. Right here on Bloomberg. Bloomberg New Economy Forum is in full swing in Singapore. Francine Lacroix sat down with the UBS CEO Sergio Ermotti.
The first 90, 100 days was at 90% on the integration. Right now it's coming down, but it's still very substantial. I don't expect this to change dramatically from kind of 2/3, 1/3. But it's true that what I need to pay attention, and we need to pay attention that clients, we spoke about the macroeconomic conditions, everything that goes on. We need to continue to stay close to clients. We need to run the business. There is a day-to-day business, there is an integration business, and as we speak, we also see a lot of changes affecting our economies and the way we operate as a bank. Digitalization, technology, artificial intelligence is changing the way we're going to work in the next 3 to 5 years. So the real challenge right now for us is not to be stuck into integrating the bank using the model we had in the last 5 years or we have today, but rather also thinking how it's going to be in 3 to 5 years' time. So I can't, and all of us in the bank cannot afford to be distracted from the clients and from a forward-looking aspect of what we need to do.
Now, the UBS CEO Sergio Ermotti there went on, Manus, to say that the demand for their AT1 bonds in a sale yesterday signaled confidence. How's this for confidence, Manus? Folks who were burned by the Credit Suisse AT1 bond wipeout bought into UBS's product yesterday.
Well, they didn't just buy them, Danny, did they? They literally battered down the doors of Bahnhofstrasse. Yeah. He offered, $3.5 billion. Bid-to-cover ratio was around $36 billion for that. So that's a vote for Ermotti and what the Hollywood cast, as his previous CFO, said.
Yep, not too bad. All right, coming up, we're going to hear from Ken Griffin from the same forum.
Welcome back to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. Chair Jerome Powell calls for courage and humility in Fed forecast methods. Treasury yields fall to the lowest in more than a month as traders await an auction and more comments from Powell. Disney rises after an earnings beat. Theme parks deliver the biggest boost to profits as streaming losses narrow and subscribers grew. And Ken Griffin warns the world is facing structural changes. We're going to hear more from the Bloomberg New Economy Forum in Singapore throughout this hour. It was a bond rally yesterday. Over the past 24 hours, it eases, and we are back above 4.5%. It is still a somewhat narrow range that we've been trading around, this 4.5%. It's the one that JP Morgan says that the quants of the world, the CTAs, are going to come and continue to bite if we remain around here. So we're up 4 basis points this morning. Will an auction of 30-year notes and more comments from Powell come to crash the party? Crude, that is up almost 1% after falling 7% for the past 7 days. Manus and I just walked you through the backwardation that has gone poof in this market. So those supply concerns not as apparent as they once were. And finally, Bitcoin, Manus, because I know it is your favorite asset, above 36,000. Everyone is very excited that an ETF might be finally coming to market.
Yeah, just for full disclosure, I don't have any exposure to Bitcoin that I knowingly have. And when that ETF arrives, it could be buy the rumor, sell the fact. But I want to give you some facts on the stock market. Nobody got indigestion on the bond auction last night. Let's see how the 30-year paper goes down. Does it go down like honey today? We're on for the 8th consecutive cash market gain in stocks. The VIX has dropped, the longest slide since October 2015. And if you get green on this screen by the close of business today, you're going to be up for the 9th day in a row. That is going to be the longest rally in equity since 2004. As I said to you, there's going to be a $40 billion bond auction last night. In terms of the NASDAQ, flat at the moment. You've got UBS out with a note saying, you know what, we prefer China tech relative to the Magnificent Seven because Chinese tech is trading at a 30% discount. They are more cautious on the Magnificent Seven. We've got a little bit of green in the Euro Stoxx 50. Now, the reason I've chosen this stock, which is Aiden, it's a payment system in Europe. They're guiding, they're saying growth targets are starting to soothe their investor concerns, and they're here to talk to some of the US investors. The stock is up 32%. Let's see how this bond auction goes tonight. Danny.
Manus, the bond auction, we were just speaking with Klaus Baader about it, about this idea it's not going anywhere because we're about to enter an election year. And he says it's unlikely that any of the deficit issues are going to be worked out in that kind of political environment.
Yeah, well, apparently we are like drunken sailors in this country when it comes to the deficit, according to Ken Griffin, who sat down at the New Economy Forum. So more of that a little bit later on. To geopolitics, Danny, and higher rates, they're dominating the concerns of the business leaders at the New Economy Forum in Singapore. Speaking of which, Ken Griffin spoke exclusively with Bloomberg, with the editorial director, our very own Eric Schatzker.
Regretfully, the peace dividend is clearly at the end of the road. No matter what one may dream to be reality, reality is there's two wars in the world right here, right now, one of which is in Europe. So there's no doubt that the NATO countries are going to have to increase defense budgets over the years ahead. That's going to come at a point in time where governments around the world are already struggling with the sizes of their deficits. And then when it comes to globalization, I mean, we're in Singapore. We are at one of the global nexus in the world of trade, of finance. Many of us in this room have been tremendous beneficiaries of globalization. And it hasn't been great for everybody, to be clear. But for the world as a whole, it's pulled 1 billion people out of poverty. But now we're talking about deglobalization. We're talking about re-architecting supply chains. And some of this is rooted in the behavior that we saw in the pandemic. We saw countries hoarding personal safety equipment. We saw the tension around the distribution of vaccines around the world. Countries are much more sensitive to what do we want to have created domestically so that we're not reliant upon global trade. And then take that into the general geopolitical trends right here, right now. The war in the Ukraine has resulted in Europe losing access to natural gas from Russia for all intents and purposes. Europe struggling to deal with how does it maintain its economy having lost its cheap source of energy. So there's many trends at play right now that are pushing us towards deglobalization. And with that is almost certainly a trend towards higher baseline inflation.
And the implications of higher inflation might be obvious to some, but I think we'd all like to hear it from Ken Griffin.
Well, it depends on where this baseline effect lands. If we're looking at a 2 or 3% baseline effect, in some sense, the central bank will have a much easier job in the United States. The struggle over the last 20 years has actually been to hit a 2% target. And there's a variety of reasons that you want a low level of background inflation. It helps to lubricate the wheels of commerce. And that number the Fed has committed to as being 2%, they're going to fight pretty hard to keep that as the target for a litany of good reasons. But it also means that we're likely to see higher real rates, and we're likely to see higher nominal rates, and that will have a real implication on the cost of funding our enormous deficit. The U.S. has $33 trillion of debt outstanding. We didn't plan for an era with higher nominal and higher real rates when we went on the spending spree that created a $33 trillion deficit.
Citadel founder Ken Griffin speaking at the Bloomberg New Economy Forum. Man, is one refrain when folks hear that kind of thing, like Ken Griffin is talking about, this deficit spending, this continued issuance, all of that, one thing that we've commonly heard from guests is that the consequence for the Fed will be no more QT, that they can't possibly continue to sell bonds in an era where there's just indigestion in the bond market for these auctions coming out.
Well, you have this classic clash between the Treasury and the Fed. The Treasury have got an interest bill to pay. They've got to, pay up to $1 trillion in terms of interest payments, and this is where the real clash is going to come. He says that we're spending in the U.S. like a drunken sailor with $33 trillion of a deficit. And I think therein lies the point, which is higher inflation for decades and higher rates. And that is what this market absolutely will not buy. It just won't take that on. It's got nearly 100 basis points of cuts for next year here.
Yeah. Is there going to have to be it's this irony of the higher for longer narrative lasted, 2 weeks? The Fed finally, it took 9 months to convince everyone, and then we only believed it for about 2 weeks. All right, Manis, coming up, we're going to talk about the debate yesterday. Republican candidates attacked the current frontrunner, Donald Trump, in Miami. But did they do enough to distinguish themselves from the former president? We discuss that next on Bloomberg.
everybody wants to talk about President Trump.
He owes it to you to be on this stage and explain why he should get another chance.
Anybody who's going to be spending the next year and a half of their life focusing on keeping themselves out of jail and courtrooms cannot lead this party or this country.
I don't think he's the right president now.
2024 is our final battle. Stand with me in the fight. We will finish the job that we started.
Republican candidates taking jabs at former President Donald Trump at the third Republican debate hosted by NBC. Trump skipped the debate, and as you could see just there, he held his own rally in Miami. Joining us now from Washington is Zach Cohen of Bloomberg Government. Zach, earlier in some of these campaigns during the primary, there had been this hesitancy to really, go guns a-blazing after Donald Trump. Is that all done now? Did candidates really press into him?
Certainly, there were moments where candidates tried to make the case that they were, one, best positioned to be the alternative to Donald Trump in this Republican primary. As New Jersey Governor Chris Christie pointed out, he faces a number of criminal indictments that he'll be facing over the next couple of months. But there were also efforts to try to show Republican primary voters that they were best prepared to replace Donald Trump as the frontrunner for the Republican Party. You had Florida Governor Ron DeSantis saying it's time to move on. Former UN Ambassador Nikki Haley saying he was a good president for the time when he was elected in 2016, but needs to find somebody else for the 2024 nomination. This comes up right on the heels of a number of Republican losses in places like Ohio, Kentucky, Virginia in Tuesday's elections, where Republicans lost a string of battles, especially when it came to abortion rights. And Republicans, I think Vivek Ramaswamy, the entrepreneur on the stage, pointed out Republicans are a party of losers right now. And so they're looking for a change of direction. And a lot of them are looking to place the blame on Donald Trump as the leader of the party at this juncture.
Zach, how do they do on global foreign policy? I look at some of the comments. They were just stunning. Ramaswamy calling Nikki Haley a Dick Cheney in 3-inch heels, and she called him scum. So obviously the intellectual debate about foreign policy was high.
Certainly, that was, I think, one of the most substantive differences, honestly, between the candidates. You had Haley and Christie on one side arguing in favor of a robust defense of Ukraine in its attempt to rebut the Russian invasion that's been going on for over a year now. And then you had Vivek Ramaswamy, Florida Governor Ron DeSantis, trying to make the case that, no, that money is better spent on things like securing the southern border with Mexico. And Senator Tim Scott, the fifth candidate on the debate stage, who's voted for a number of these packages, making the case that, well, we probably need to audit where the funds are going first before we consider more aid. And so that was probably the most substantive policy difference between these candidates, who will determine whether Ukraine gets additional aid if, in fact, Republicans win full control of not just the White House, but of Congress.
When it comes to the billionaire class, there's been more, shall we say, uncertainty over who they will be backing this time around. Ken Griffin, in speaking to Bloomberg during the Bloomberg New Economy Forum, said he had high hopes for Nikki Haley. He said, I think this could be a galvanizing moment for her campaign. After this debate, is there a sign that, again, that billionaire class of Republican donors might start to coalesce around her?
I mean, this is really the last chance for any candidate who wants to be the alternative to Donald Trump to really make the case. The Iowa caucuses are coming up in January. There might be one more debate in December, but hasn't actually been scheduled yet. And so this was the opportunity for these five candidates to make the case to voters and to donors that they should stay in this race, and that those donors should keep on the money spigot that they'll need, not just to compete in Iowa, but beyond that in New Hampshire, South Carolina, Super Tuesday states in March. And that's really where they'll need some deep pockets in order to stay on TV and in order to stay in the race through the Republican nomination convention.
How much do we take away from the Democrats taking a win in Ohio, Kentucky, and Virginia? I mean, we are still 1 year out from this election. A lot can change. The lineup can change. We don't know who is going to win the mandate on the Republican side. Is it too early to hang your hat on those kind of victories?
Well, certainly the biggest difference will be there will be a Republican, or there'll be a presidential campaign at the top of the ticket in 2024. President Joe Biden will be seeking a second term, and there's a wide gulf between the performance of Democrats in some of these states, both blue, red, and purple, on Tuesday, with Biden's own approval ratings, which tend to be fairly lackluster. And so how that informs the debate and how that changes turnout among voters certainly will be different from what we saw on Tuesday. But the key takeaway for both Democrats and Republicans is especially on abortion rights after the fall of the Roe v. Wade Supreme Court decision that assured a federal right to an abortion, that issue continues to galvanize not just Democrats, but swing voters as well, who are looking to keep that on the forefront of voters' minds going into next year's election.
Right. Zach, we started this out by mentioning that there was some counter-programming from former President Donald Trump in Miami with a rally. There have been reports of how he has reacted during his various court cases. Has there been any clear movement around voter appetite towards him? There was that poll over the weekend that caught a lot of folks' attention of him versus Biden. What sort of messages have come out, again, from the different reports of him in court and from his most recent rallies?
Well, I think we've seen Trump continues to be the front runner for the Republican nomination after he was obviously elected in 2016, but then lost in 2020. Some of that might be attributable to Biden's own flagging approval ratings, especially among independent voters, an increasingly small but persuadable bloc. And then Democrats are also concerned about keeping up turnout among young voters or voters of color, typically a huge voting bloc for them all the way up and down the ticket, but may have been concerned or less impressed with how the Biden administration has delivered the last couple of years. And so some of this might be a comparison between Trump, who's the frontrunner for the Republican nomination, despite these multiple indictments against him in multiple jurisdictions. But they certainly haven't weakened his position in the Republican primary field. In fact, in some cases, it's actually strengthened it, as Republicans have made the case that this is some sort of weaponization of the federal government, of the FBI, of the DOJ against the frontrunner for the Republican nomination.
Zach, thank you very much. Zach Cohen on the very latest, the third Republican candidate's debate for president right here on Bloomberg. Well, concerns over the situation in the Middle East also dominating the discussions and the Bloomberg New Economy Forum in Singapore. John Micklethwaite, our Bloomberg editor-in-chief, spoke exclusively with the former U.S. Secretary of State, Hillary Clinton.
A ceasefire, if it were possible, which frankly I don't think is possible. I don't think, Israel is interested in a ceasefire at this point. But they are perhaps willing to have what we do call humanitarian pauses for the purpose of both getting aid in to try to assist the civilians in Gaza, but also getting the more than 240 hostages out. These hostages are not just Israeli. One of the biggest groups of hostages are workers from Thailand who are working on farms in Israel. So there is a global dimension to the hostages that a pause could perhaps inspire some willingness on the part of Hamas to let the hostages go. But a ceasefire that would freeze the situation at this point is not something that is going to, really undermine Hamas's capacity, especially with 200 miles of tunnels that they have constructed over the last decade to launch yet another attack on Israel. And that would be intolerable. And I think it would be intolerable for, any nation represented at the forum.
There seem to be kind of two big theories going on about this war. One is that this is the end of the peace process. The other, which you champion, the other is that this is, if nothing else, this will prompt finally some move towards a two-state solution. Which side of that do you fit on?
Well, I actually try to fit on both. And I'll tell you, John, I think it's important to have some aspiration, some goal that we can look toward. Many of us, my husband particularly, worked very hard on trying to get a two-state solution. And it, frankly, in retrospect, is heartbreaking that Yasser Arafat walked away from the deal that Bill had brokered between Israel and the Palestinian Authority back in 2000. There could have been a Palestinian state on up to 97% of the land from the 1948 division that would have been in existence for 23 years now. So I think you have to create the environment in which there is a chance to revitalize the peace process and a potential for a two-state solution. Hamas is not interested in a two-state solution. They are dedicated to the destruction of Israel. That is in their charter. If you've been watching lots of different outlets over the last month, that is what the leaders of Hamas say. They want to destroy Israel. So Hamas is not a partner for any kind of peace or two-state solution. but the Palestinian Authority might one time again be. New leadership in Gaza might again be. So we have to get to a point where that's possible.
Very quickly, do you think that Benjamin Netanyahu is a partner for a two-state solution?
I don't think there's any evidence of that. I think the Israeli people will have to decide about his leadership. I think there will be investigations about what led up to and what happened on October the 7th. But I think there needs to be new leadership of the Israelis and the Palestinians in order to have any chance at some kind of peace deal, especially a two-state solution.
Former U.S. Secretary of State Hillary Clinton there speaking exclusively to John Micklethwaite, Bloomberg editor-in-chief at the New Economy Forum in Singapore. Now, coming up, we're going to take a look at some of the market-moving events to watch throughout the day. But first, Manus, you have a market that's already moved a whole heck of a lot over the past 4 days.
It has indeed. Have a look at 30-year paper. We've got, 24 billion of 30-year bonds coming down the pike in the auction tonight. The 40 billion of 10s went fine last night. This is the drop in 30-year bonds. You're also looking at one of the biggest moves lower in mortgage rates in a year yesterday, down by 25 basis points. So you are seeing mortgage applications rise. Everything's priced off the 30-year for the housing market. We keep an eye on that tonight. It dropped the most in a year, 25 bips to 7.61%. Auction eyes are lit on Bloomberg.
This is Bloomberg Brief. I'm Danny Berger in London. Manus Cranny is in New York. Let's get you set up for your trading day with a look at what's ahead. We're going to get U.S. initial jobless claims, 8:30 a.m. Eastern time, plus $24 billion of 30-year Treasury bonds go on sale. Then we're going to hear from President Lagarde at 12:30 p.m. Eastern, followed by Chair Powell speaking at the IMF conference at 2 p.m. And then some more consumer earnings. We're going to hear from Wynn Resorts after the U.S. market closed. But until then, Manus, it's still the whole new world that we're living in with Disney, that big old earnings beat.
You're desperately hoping that I'll sing a whole new world, aren't you? No.
I am.
No.
You're a beautiful singer, Manus. The world needs to hear it.
Let me assure you, it was 25 years ago and I sang on CNBC. We won't be doing that in our Bloomberg career. But
Is that why you're at Bloomberg now?
It's a whole host of reasons. It's a whole new world at Bloomberg. Excuse the pun. Bob Iger, you're tempting me, aren't you? A whole new world. There you go. That's as close as you'll get to a song out of me.
That made my day.
That made your day. That's all that we're here for. The entire crew here at 2:30 in the morning to make your day. Bob Iger is going. I mean, he's cutting hard and he's cutting deep, and the market likes it. 3.7%. It was up a little bit higher earlier. Theme parks. Have you been to a Disney theme park, Danny?
Not in a long time. I'm going to be honest. There's this thing, I don't know if you've seen this in America, Manus, of Disney adults who love Disney, will have their honeymoon there. Power to them. It's not me. I probably won't go until I have a child to bring to Disney.
You've had enough of this whole wedding thing. What else is on our slate today? I know we're obsessed about this 30-year auction, which is probably more important, but ARM, I mean, they just weren't full of joy, were they?
No, I mean, it's the concern about smartphones. They say they're an AI company. That's the future. But for now, Manus, the focus is on the iPhones. And for us, the focus is on Jay Powell and $24 billion of 30-year notes coming to auction. This is Bloomberg.